Do you want to learn Elliott wave theory? Well, if so, consider joining the Green Star Trading Patreon for Tier 2 at £10 a month or Tier 3 at £15 a month, and you'll get access to this Introduction to Elliott Wave Theory series, which is an 11-part video series you can access, which basically will teach you Elliott wave theory from scratch as an easy to follow format. You'll also get access to series like the My Chart series, which shows you how I use all the indicators and tools I use on TradingView and how to set them up the same way. There's also a playlist for trading using what I call the standard trade setup. There's lots of other educational material as well. Plus, what I think are the main benefits of joining the Green Star Trading Patreon. If you join at Tier 2 for £10 a month, you get everything I just mentioned. You also get access to the public Discord where there are hundreds of members discussing ideas daily. You also get access to the weekly live streams where I can often waffle on for the best part of 5 hours. And in those things, you're free to ask me anything you want in the live chat, within reason, of course. Free to make requests for me to cover certain assets, and even if you want me to look at your own Elliott wave work and submit it via the Discord, I'll happily go through it in a live stream as part of a learning experience. You get all of those benefits, plus weekly exclusive videos, and all the prior educational content I produce. But if you want even more, and for just another £5 a month for £15 a month, you also unlock the monthly dividend calendar and the stock rating system I put out at the start of every month as well. And if neither of those things appeal to you and you just want to support the channel on YouTube, then £5 a month would be very welcome. And you still bag yourself an exclusive video each week. Essentially, what I think you're getting here is exceptional value. If you want to learn Elliott Wave and you want access to a trading community and all this educational material, give it a try for just £10 a month. And if you don't like it, cancel your subscription before the following month. Anyway, guys, let's get back to the video now. Cheers. Hello, everybody, and welcome to Green Star Trading with me, Tom. All views, opinions, and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be taking a look at the CFDs on gold. Just gold today. I'm still working on account, primary and alternate, for silver at the moment, and if I was to try and talk you through the ideas at the moment, I'd probably be throwing more than half a dozen ideas at you, and I really don't want to do that. So until I've got a unified idea, a coherent idea that I have conviction in, I'm just going to have to leave silver to one side while I work on it. In the meantime, however, we do have two very clearly defined counts in gold, and that's what we're going to be going over today. Now, I've gone through the long-term counts multiple times before, so we're just going to come into all of this noise up here and talk about the recent price action. So let's just zoom in. Assuming we topped in a primary 3 back in August 2020, we have since been correcting into a primary 4, and I now think we have had our first move up and back at intermediate degree of what will be our fifth and final primary wave 5. Okay, so the big wave 3 to come. Now, quick note on that before we go on and actually look at the smaller term count here. If we are entering a third wave, we could be looking at an extended third wave, which is the most common of the ways to extend within an impulse. However, we are in the commodities market looking at gold, and we have been talking about the possibility of an extended fifth wave in the oil market at the moment. The same emotions which drive the extended fifth wave of commodities, which is fear primarily, could well be at play in the gold market. Now, we won't know until it happens because it's out there waiting for us. The chart always tells us what's coming if we can understand it, and it helps us make sense of what's going on if we can perceive it, and it will preempt any news or explanation of it. However, that will be the reason we will always find one. Now, under the current circumstances, that fear that drives the fifth wave of a commodities market, that can come on thick and fast, and it can get more and more intense as time goes on. That could be inflation, runaway inflation. Perhaps the Fed's attempt to fight it fails, who knows. War in Ukraine could escalate and get worse. There are potential for famine and grain exports and all these other things which have been interrupted from what is one of the breadbaskets of Europe. So there's a whole multitude of reasons as to why the chart would extend into a fifth wave, but it doesn't have to happen. The only reason I'm saying this is, even after we complete an intermediate 3 to new highs and significantly new highs, the fun, so to speak, for lack of a better term, could only just be beginning. If the fifth were to extend within the fifth itself, which extended, then that wave would be greater than, probably significantly longer than the three, although the three itself can't be the shortest, and the fifth wave at the larger primary degree could be longer than the three at primary degree. So you see what I'm saying? Just because we're entering a fifth wave doesn't mean that the top's imminent. It could be a bloody long way off. We just don't know, and we won't know until price starts to develop further. So, just an interesting point. I thought I'd share that since we're talking about gold here. We're talking about commodities and fifth waves like we mentioned in oil. So now let's come in and talk about this count for a minute. So, I'm seeing this as a WXY with the Y being a triangle. Combination count, essentially, for our primary wave 4. From there I see a 1 and a zigzag into a 2. Now we're going to come down to the 2 hour now for a minute to just pick apart this move down from the high a little clearer. So here I have 1, 2, 3, 4, 5 into an A. I've then gone for an expanded flat, A, B, C, A, B, 1, 2, 3, 4, 5, C, B, and that completes our A and our B wave, with the B wave being in the expanded flat 3, 3, 5, A, B, C. From there we've gone 5 waves down into a 1, 2, 1, 2 smaller degree, 3, 4, 5 into 3 at larger degree, minute degree, and from there I've got a running flat, A, B, C, D, sorry, not a running flat, excuse me, getting a bit tired, a running triangle, and then finally 5 waves down into the 5th minute wave of the C of the 2, completing our ABC correction, our zigzag. Now it's a little longer, the C slightly extended but nothing extreme. The 1 to 1 is right here, this white line. Okay, and we came and stopped before the 123.6. Now the most common extension after going 1 to 1 is the 1618, and we didn't get anywhere near that. So it is roughly parity. It's not that close, but it's within the ballpark. Now from there I have the count off of the low as I think we can see it in here as 1, 2, 3, 4, 5 into a 1, A, B, C into a 2, 1, 2, 3, 4, 5 into a 3, 4, 5 into the 5 of a 1, completing minute wave 1 here, and then we have 1, 2, 3, 4, 5 A, B, C into B, and 1, 2, 3, 4, 5 down here in a C to complete a zigzag. From there we get 1, 2, 3, 4, 5 into a 1 and A, B, C into a 2, completing another 1, 2. So we've got 1, 2 minute degree, 1, 2 minuet degree, and now we're going to go 1, 2 sub minuet degree, and now we're going to erupt. Okay, and start to push higher, and all of this will be building a wave 3 extension by the looks of it at minor wave degree. Okay, minute wave degree, sorry, into the 3, and then that will be building our minor 1 of our intermediate 5 of our primary 5. So already, if this is correct wave count, a pretty strong start. Now this could be minor 1, 2, and this could be minute 1, 2, we don't know. We'll see how it looks as things progress. Now, overall though, this gives us some pretty tight entries if you wanted to go long right now in terms of risk management. You only have to take a couple of % exposure from where we currently are if you want to use the structural stop at minuet wave degree. Let's just have a quick look at these levels. So 1827.80 from where we are trading at the moment gives you 1.29%, actually 129 basis points, so minimal risk there. Slightly further, if we want to take the minute wave degree invalidation point down here at 1786.28, that gives you 3.5%, and a little bit further for the whole intermediate degree, which was an incredibly deep correction for wave 2, but they can be very deep. Okay, so that's how I see it currently. If these levels break down, bump, 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 and we go through all of this, we have one place left to look for, which is an alternate interpretation for this bullish count. It's not the alternate, but I'm not going to let go of it as I think it's still valid. So let's just remove the primary, bring up this triangle idea here. This sees the whole structure of wave 4 as a triangle, and therefore gives us a leading diagonal for a 1 as opposed to the D and the E of our other combination triangle, breaking out still into the same 1 up here, but now A, B, C down into the 2 into the same place, but this gives us a bullish invalidation level at a lower level because that's where the E of the triangle terminated. Completing the primary wave 4 gives us an invalidation point of 1753.10. So break all of these, and there's no bullish count that I've come up with left at that point. So then we have to consider the alternate. So what is the alternate? The alternate is a flat pattern. Okay, now what I've done here is I've counted the triangle again. I've used the triangle again. That is a theme of all the counts at the moment. And I have a W, X and a Y for my A. I have an A and a B and a C for my B, taking us to within 90% of the previous side. Or actually, if you look at it, really, it's like 99%. So we get a B wave target up here. We do not expand, so it's not an expanding or a running flat though. Okay, it's going to be a regular flat if it's a flat at all. Now the triangle was the B wave, so we went A, B, C, 5, 3, 5, using the triangle as our free count. Even though I know it's 5 waves, we count it as a free for the purposes of being part of the zigzag, which is the B wave here. Okay, so now we expect to have 5 waves down in a C. Now let's just have a quick recap for those of you who are new to the channel, an opportunity to learn a little bit of Elliott wave. And let's take our most common flat pattern, which is the expanded flat pattern, like so. And this gives us A, B and C. B goes beyond the A to certain Fibonacci targets, and the C extends to certain Fibonacci targets beyond where the A completed. We also have a running flat, which is the most rare, or the least common, I should say, of the flat patterns, which is the B expands, but the C completes before the A. And then we have a regular flat, where the B does not expand, but comes to within 90% of the high, or even 100% of the high. Okay, and then comes roughly back to where the A completed. It will likely go slightly beyond the A. It can go a little bit deeper, but it will likely finish somewhere beyond the A. Now that's likely what I think we're dealing with here, if this alternate is correct. We're just doing a big sideways move, right? And that's the alternate. Now I'll fill out the subwave count of this noise down here. This could be 1, 2 of a smaller wave degree of a 3, but until we break all of those bullish levels, I don't really see the point of doing that. If we break those bullish levels, then I'll start counting it bearishly from here. So that's the alternate. Alright then, so quick recap. Primary triangle combination we had here, WXY, 1, 2, and we've got all of our invalidation levels here currently, expecting higher pricing to come from where we are currently. We then have the triangle count with the invalidation at 1758. This takes the whole thing as a triangle, and then finally we have the flat as the alternate. And that concludes the Elliott wave portion of the video. Really not much else to talk about now. Don't have volume available, unfortunately, here on the CFD charts for gold. But we're back at the 250 exponential moving average here, which is the green line. This is on the day time frame, currently hovering around that. We'll see if we hold this level. We've tested the 60 exponential from above and then bounced, and we've tested it now from below and have pulled back a little bit. Translation above the 60 and above the 250, and then start to curve all of these moving averages higher like we were when we were trending in the wave 3 would be very positive, and we'd like to see that. The MACD reading was the highest reading we had since that high back in August 2020. Same here in the RSI, highest reading we had since then. We've come back in a zigzag to oversold conditions on the daily time frame. What we've done, what I call a round trip, overbought to oversold. That could be sufficient to be the wave 2. Now we go back into neutral territory. 1 and 2, still below the zero bound in the MACD, looking for that momentum to translate higher above the zero bound and to start the trend above the previous high in the MACD. I would expect that, given that I'm saying this is 1 and 2, the 3 should have stronger momentum in it, and I would expect to see us do the same here in the RSI, to get out of the neutral zone and then to trend from overbought back to neutral as we start to march higher in the 3. So still got a lot of work to do yet, in a bit of a precarious position, but it's when we're in this precarious position here that we can get probably the safest margin of entry with the minimal risk if we do get stopped out. Alright then guys, thank you very much for joining me on this technical analysis of gold. If you're new to the channel and if you like what you're seeing, please subscribe, but smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining the Patreon, there's a link in the description box below. It's still early in the month, so it's a perfect time to do it. And yeah, we'd be glad to have you. Take care of yourselves, guys, and we'll be back with you later in the week. All the best. Bye bye.